Hey guys, what's going on? It's Rekt Capital and welcome back to another episode here on the Rekt Capital channel. Thank you so much for tuning in. Today we're going to be focusing on a very important topic that I get asked about a lot lately, and that's the pi cycle top indicator and the fact that we might be approaching a cycle top for Bitcoin's price action. So we're going to be talking about this indicator in particular and why it's showcasing a potential peaking and topping for Bitcoin's price action. So without further ado, let's dive right into the video. And of course, if you haven't subscribed to the channel, feel free to do so. We're going to be focusing here on the two moving averages, which constitute this really interesting indicator. It's two moving averages that are on the daily. So daily moving averages, you have one, which is the 111-day moving average, which is in yellow, and you have the 350 daily moving average multiplied by 2, which is in green. So with that very brief introduction, you can understand that moving averages are lagging indicators, because if we just focus on the moving average, the yellow one right over here, which takes into account the previous 111 days worth of price action and just averages it out. So whenever we have a data point for this moving average, that data point is produced every 111 days, right? So this is essentially a sequence of data points of that moving average produced every 111 days. So that's essentially how a moving average pretty much very simplistically works. And it takes a while for that data point to be produced, right? Within a time period of 111 days, price action can change so many different ways, and that's a period of over 3 months, 3.5 months roughly speaking. So a lot of stuff can happen in price action. So even if we're converging right over here on the pi cycle top indicator, you can see how we are converging, but we're not actually crossing. So you're seeing that the yellow orange moving average here, which is of course the shorter one, the 111 daily moving average, that's going to be traveling much faster than the 350 daily moving average multiplied by 2. So the fact that the orange one is going to be traveling faster, this one is going to be the main moving average that's actually going to initiate a cross right over here. But depending on where this data point actually started right over here, it's very difficult to say where this data point started, where this period of 111 days that we're experiencing here, when that exactly started. But it's very important to know that that period will close 111 days after it started. So lots can change still. And at the moment, we're seeing this convergence in these moving averages, but we can still see a lot of price action develop, and we can actually still see these two moving averages still fluctuate. So in fact, if Bitcoin experiences a nice move towards the upside, we're probably going to see that this moving average might even deviate a bit, or maybe even get closer, but not actually cross. So this cross can actually still take a long time because of the nature of these moving averages. So the fact that we're converging, yes, that is a very important thing to bear in mind, because of course, historically, whenever you look at the crosses here, right over here, for instance, that preceded a cycle top. Right over here, this preceded a cycle top as well, though not picture perfect, right? Because we saw this peak occur just before this moving average. It wasn't really bang on, it wasn't really picture perfect. So really important to just stress the fact that these moving averages are lagging indicators, and they're always going to respond to price a little bit after the fact, no matter how well it shows that this is a picture perfect timing of these cycle tops, because it can't really be picture perfect based on the true nature of these moving averages. But in any case, these crossovers have led to cycle tops, timing those cycle tops. And this indicator overall reminds me of the moving average convergence divergence indicator, which you guys probably know best as the MACD, which also has two moving averages which cross over, but price tends to appreciate whenever we have a bullish crossover a little bit after that move has happened. So it's really important to, of course, be mindful that yes, a crossover could be happening, and that's potentially when you should be building a position in the context of a MACD. Because if a MACD is starting to slowly cross over, or it's actually teasing a crossover, then you can start building a position because you know that price is going to appreciate. But price is going to appreciate before that crossover actually takes place. The crossover is only going to lag behind the price action, and it's going to really just confirm the move more than anything else. So the way I'm going to treat this pi cycle top indicator, no matter how accurate it could be, I'm always going to treat it as a confirmation of a cycle top. And this leads to an important segue in this current video, because I'm not going to be using this indicator in isolation. I'm going to be using it as confirmation, which only leads me to my next point of using other indicators for additional confluence, because generally you don't want to rely on one indicator and then base your trading decision or investing decision based on that one indicator. Because if we think about another indicator that you guys probably know, the relative strength index, the RSI, if you were to focus on the RSI, whether that's on Bitcoin's price action in the 20K region, you'd notice that the RSI was overextended. But we've seen the RSI overextended for months and months and months, because that's typically what happens in bull markets. So you can't focus on this indicator on the RSI in isolation, because the RSI would have been telling you to sell Bitcoin at 20,000. So that's something to also bear in mind, because we can't look at one indicator in isolation. So we have to look at different types of indicators just to build a broader picture of understanding. I hope that makes sense. So the pi cycle top might be suggesting a small warning sign. Yes, there is a bit of convergence. There is no actual crossover. And in fact, this convergence can still continue for a little bit, for quite a substantial amount of time, for a period of a few months, in fact. This convergence can still happen and still could even go on for a while before actually the crossover occurs. But once that crossover occurs, then we're probably going to see that confirmation of a cycle top. But that top isn't right now, because we haven't crossed over. It is a convergence. So we can't say now that this 60,000 was the top, because there has been no crossover. It's going to take a while for that crossover to occur. So we need to look at different types of indicators just to build a broader picture of understanding and a broader picture of confluence. Maybe the pi cycle top is showcasing a warning sign. Fair enough. But what does the stock to flow model showcase here? Well, in my newsletter, I've been talking about how we have to anticipate deviations beyond the stock to flow line. So you see that the stock to flow line here is growing, rising, along with Bitcoin's price action. And we've never really seen such a trend following, perfect trend following of Bitcoin's price action along with the stock to flow line. So really important to just understand that we see cycle tops when we deviate beyond the stock to flow line. Cycle tops when we deviate beyond the stock to flow line, apologies. And we see a stock to flow line here rising, but the deviation happens a little bit quicker than. So Bitcoin's price action essentially rises quicker than the stock to flow line. In this case, in this cycle, they're rising in tandem. But there is going to be a period of time where you'll see the stock to flow line actually level out into a flat line. And that's probably going to be when Bitcoin deviates beyond this stock to flow line. But that also isn't a given, because we could still see Bitcoin consolidate for a bit of time. We could see Bitcoin actually have a bull market correction still and maintain itself below the stock to flow line, only to start deviating later. So those are some of the things that we need to bear in mind in terms of how quickly this upside deviation will occur. Because this upside deviation occurs for a specific amount of time. You can see that it's relatively the same amount of time every time. So just notice how I pretty much from the start of this deviation to the peak, you can see that this is a similar amount of time, roughly speaking, right? Every single time. Pretty interesting to see this sort of cyclicality across the deviations. So we're probably going to have to see a deviation beyond the stock to flow line later on in the cycle, somewhere that's going to be quite similar. So let me just do this. wherever that deviation starts. It could even start over here, whatever the case may be. And if it starts around here, that would probably be September or October, then it would probably peak near the end of 2021. But it really depends where that deviation happens. But in any case, guys, I've rambled on a bit about how I think about the stock to flow line and the stock to flow model and Bitcoin's price action in the context of this model and its upside deviations, and we haven't seen the upside deviation. So that's the stock to flow model saying that we haven't peaked in this bull market. We'll peak only once we deviate beyond the stock to flow line, and we haven't yet. So the stock to flow model is saying that we haven't peaked. The pi cycle model itself isn't saying that we've peaked because we're just converging. So there is no peak in both of these models. In fact, the pi cycle top here is saying that we might be close. We might be getting closer to a peak, but that peak could still take place in the next few months, according to these moving averages. The stock to flow model is showcasing that we haven't peaked because we haven't seen an upside deviation. And the leveling out of the stock to flow line right over here is going to start in mid-May. We're only in early April, so we're still far away from a high probability deviation occurring. But then again, we could still see consolidation and a retrace. So really important to just see when Bitcoin will deviate beyond this stock to flow model, because it could happen as early as mid-May, but it could easily happen much later than that. So there really isn't nothing to worry about at this point in the cycle. Let's wait till at least mid-May to roll around for the stock to flow line to level out and to start paying attention to these upside deviations. In any case, guys, there are a wide variety of different data science indicators that you can use to your advantage in timing the Bitcoin top, and we've only compared two of these. The pi cycle top indicator, which is maybe showcasing a warning sign, but not necessarily timing the peak just yet. It's going to take a little bit of a while for that peak to actually be timed, for that crossover to actually take place, just based on how these moving averages are constructed and what sort of period it takes into account. So specifically 111 days. Lots of movement can still happen in Bitcoin's price action during that time. And also the stock to flow model, which is another data science indicator showcasing that we're not yet close to an upside deviation, let alone a peak in Bitcoin's price action in of itself. So different models will give you confluence. And the more models you have at your disposal, the broader picture of confluence and understanding you'll be able to build. But based on these two models at the moment, there is no Bitcoin peak. As of now, right now, no need to worry at the moment. But having said that, thank you guys so much for watching. Please leave a like if you'd like to see more videos like this in the future, and of course subscribe to the channel if you haven't already. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.